You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is financial consultant and wealth manager Richard Knowles of Knowles & Associates in Vancouver. Welcome to the show, Richard.
Thank you, Jim. It's a pleasure to be here.
The major topics we'll be covering today: deflation in Europe, how the bond market can help predict what's going to happen with equities, and, of course, the plunging price of oil. Well, first of all, let's talk about deflation in Europe. Is this a good or bad thing?
Well, I suppose the answer to that is really, there is no one answer. It depends really with whom you're speaking. Deflation in general is defined as the increased valuation of the currency and the dropping in consumer prices. Now, this sometimes it hits someone's ear as counterproductive, deflation being a negative, being going down, and inflation being a good thing because it's going up. But if you look at how inflation works, inflating prices are actually helping, if you like, corporations do better because the prices go up, and therefore the idea with inflation is that with prices going up, there's more wages that can be paid because companies make more money. So they can charge the population a higher price, and consequently pay more wages to their employees, and therefore there's higher salaries. And consequently, inflation means that everybody seems to be making more money at first until the prices catch up. So it's a kind of a balance act. But everything is increasing over time. And that can be a problem because inevitably you're losing the purchasing power of your currency. So what we typically say is that $1 20 years ago could buy more things than $1 today. And that's because inflation is a negative thing when you're talking about the value of your dollar or whatever currency you're in. With deflation, which has occurred many times in the past in economic history, has helped to balance out inflation. So in theory, if you had 2 years of inflation and then a year of deflation, that brings back the currency back to its normal buying power, and everything balances out. As long as you expect and plan for deflation periodically, it's kind of like a break. It gives inflation a bit of a break. Corporations will still continue to grow. Companies can still do well, but they won't be doing well necessarily because they're pricing up their products more, but because their products cost about the same anyway to make, they just continuing on. And the way they make a profit, like any company should, is that more people like their products better than other products. In a naturally capitalistic environment, that would indeed occur, where you're making a better product and you're not being measured necessarily purely on price, but relative value. So if you're making the same product as the guy next door, not just making it cheaper or using lower quality materials, but if it's the same materials, garnered at the same price, but you're able to offer it at a better price, or you make it better, your product will be purchased.
In other words, the way to make money is to improve your market share.
Improve your market share. And that's typical of the past. But instead, what companies have done is they've made labor cheaper, and they make their products cheaper. So there's built-in obsolescence, which started actually in the 50s. There was a whole new concept called built-in obsolescence. Make it obsolete by making it break down within a short period of time, forcing the consumer to buy more. So consequently, inflation actually decreases consumers' power. It takes away the value of our currency, and it actually deflates. Even though it's inflation we're talking about, it decreases the value of our currency over time. Now, that's because everything is going up in prices, and the theory is that the offsetting of our loss of value to buy things, in other words, our dollar's worth less now, is that we're supposed to get paid more. In other words, wages are supposed to keep up with inflation and pay us more. Well, this whole thing has come full circle, and we've been doing this, for 50-odd years, and actually the thing is starting to crash in on itself. And there's a reason for that. Basically, most currently, and I would say since the late 1990s to today, throughout the 2000s, since the turn of the century, it's been the biggest problem because corporations, while they continue to make massive profits with the use of inflation, charging more, getting things more out there, and at higher prices, have realized that they can only do so by not increasing wages and by taking wages away from the very people that are buying their products. So they take it out of their area and they move it, and it's going to become internationalized. So they'll go to the Philippines or they'll go to China, and China's been there for a long time, since the 50s and 60s. But now they go to other places where labor costs are lower, and therefore they cream the profits from the difference, but they don't charge less. They don't pass that savings, and some of them do, but mostly they don't pass the same amount of savings on to their employees or to the people at large that they sell to. Further, and more insulting, and this has been in the news daily almost, is the fact that companies will not, when they're making these enormous profits, are not passing these profits now down to the full employee base. So they're not increasing the wages relative to the amount of profit they're making. Now, this has a lot to do with the way they've recalculated inflation by taking out many components over the last 20 years. The governments of our worlds have recalculated inflation so that it appears lower than it actually is. And this has been the final coup d'etat to the whole concept, economic concept, of the workings of inflation working for the world. Inflation doesn't work. It needs a balance. Certainly it doesn't work under the current system. So consequently, deflation now is the inevitable result of zero growth. So Bill Gross, a very well-known bond manager, probably one of the world's most respected bond managers, came out with an interesting statement that for this year, by the way, his forecast for 2015 is to be more aware that we should be expecting positive but not high growth this year. And where to get that money, where to get your growth, will be in most conservative corporate bonds, safe bonds, as well as dividend-paying companies with very low debt. So this is his forecast, but don't expect big numbers the way we saw last year, because the big growth models, the big the Facebooks and the Twitters and whatever's going on today for some big growth company that doesn't have dividends, doesn't have income, will be all over the map in this new environment. So I believe that he is making a good forecast, a certainly safe forecast, and I think if our expectations are put into line, we can have a good return this year if you're secure and safe and defensive. But ultimately, this concept of deflation is a good thing for consumers, actually, in many ways, because it makes their buying power more powerful. On the flip side, many companies, tax revenues of countries will be less, in a sense, because they're drawing less cash from them, because they charge less in interest. In a deflationary environment, you can't increase interest rates. Banks will struggle, in a sense. They will still be there making money, charging fees, but they won't be able to do their corporate deals as easily because, although borrowing money will be easier from the governments, the only thing that can sort of finalize and sort of stop deflation, if you like, will be some fiscal stimulus, which the Eurozone is now looking at. So in their next meeting, they're going to be looking at putting in some monetary stimulus and perhaps selling and buying bonds, massive purchases of government bonds they'll be doing of the Eurozone to be able to supply liquidity in cash to the Eurozone country members, so that deflation doesn't start to really wear down on the central banks. And it's a kind of an oppositional approach. Who's going to benefit from deflation? It really depends on how far the deflation goes, and if it's under controlled deflation rather than uncontrolled deflation. Deflation is really more a theory. It's never really been allowed to really be open run. People have argued that Japan has been going through a deflationary situation for many years. But within their deflationary situation, you could see there was great profits. Their monetary stimulus wasn't required until recently. And much of the lifestyle of the Japanese people was actually very good, and their yen was worth a lot of money. Because, of course, in deflationary situations, the currency is worth more than it was in an inflationary situation. And they were able to go around the world and do quite well, buying foreign real estate, etc., with a higher valued yen. So Yeah, and yet throughout that whole time, there were many companies like Toyota and Sony, many well-established Japanese companies that were doing extremely well. The banks were doing well, not extremely well, but well. And their system of life didn't seem to be suffering under deflation. So all the scaremongers of deflation really are coming from more the corporate and government side who have vested interests in inflation working in many ways. Particularly the corporations have more vested interest in inflation. However, much of inflationary theory comes from, again, inflationary theory and deflationary theory, because we've never had open deflation since late 1800s, maybe early 1900s, when deflation was a normal process in the United States. It was monitored well. You had a couple of years of inflation, maybe a year or so of deflation. It was nicely balanced, and there was indeed great growth during that time, both in companies and in employment, and it was a functioning nation in the United States where most of these studies have been done back in that time. So we have history on both inflation and deflation, which disproves the scaremongering of deflation per se. The problem with deflation today is it's not expected, and all the governments in the world try to avoid it, almost entirely try to function their whole economic theory in avoiding deflation, because the belief has been built that deflation is such a massive negative effect. Spiraling inflation and spiraling deflation both have negative effects. You can't have either one. You have to have controlled inflation, and controlled deflation can work in a very good balance act to keep things under wraps. It does mean slower growth, perhaps, for the economy, but a more stable, expected, and controlled growth is what the world needs now, rather than these erratic movements, suddenly job growth, it's like the expansion of Canadian oil sands. We saw this happen overnight, and suddenly we're having pollution problems because we didn't do it right. We have to consider the fact that stable, monitored, and controlled growth is perhaps should be the new normal, really. But it's a painful transition to get there because we have to rethink the way we do things.
We'll have more with Richard Knowles right after this.
More and more people are looking to the internet for intelligent, riveting, and thought-provoking interviews. To advertise on The Goddard Report and TalkDigitalNetwork.com, call 604-699-8600, 604-699-8600.
Welcome back. We're speaking with Richard Knowles of Knowles & Associates in Vancouver. The price of oil is making headlines every day now as it continues to go lower. One headline today saying, if it hit $20 a barrel, don't be surprised, because Saudi Arabia can produce oil and still make money at less than $10 a barrel. So all they have to do is up their production as everybody else turns off their taps because it's too expensive to produce. Richard, low oil prices, is this an economy killer?
Wow. Well, no. Well, if you're talking about Canada, they could certainly be a big problem. It certainly has been a problem. We have to go back to 1998 because we have that as an example. Anybody that was around in 1998 in Canada didn't see any problems, really. It was a global catastrophe at that time. It seemed to be if you were in Russia, you were lining up for food. You couldn't, everything was empty on the shelves. The Russian ruble collapsed as a currency, but Canada didn't seem to notice. we did have our problems. Our Canadian dollar dropped significantly during the late 90s. Due to the fact that our oil prices globally were dropping, and indeed hit under $12 a barrel at that time, U.S. So, even factoring in the inflation price difference, from then to now, which hasn't been as much as we would have hoped, in a sense. But even then, we look at the price of oil based on supply-demand. So the idea has been that oil has increased because the perception is that there is a limited supply. Well, there have been scientists actually coming forward saying that it may not be a limited supply, certainly not based on fossils, which died and left their bodies behind. We've left that science way behind. We still call them fossil fuels, but that's actually just more an old acronym, more of a joke than a reality. We do know it's a carbon-based compression over time that occurs. So these are carbons that have been compressed in some place. And oil are in reserve pools all over the planet. Now, we've discovered that there are other reserve pools under the ocean, and these pools are quite vast. And also, we've discovered in the north of our country, which we've had, I don't know, all of our lives, certainly since the history of Canada, and we just discovered that, just right in the ground, which we can leach out. And with new fractionation methods to be able to get existing wells to yield even more oil. In the U.S., they're in a surplus position. Canada certainly is surplusing. And yet we look around the world, Venezuela is a major oil producer, Russia's a major oil producer, and they have vast lands that they haven't even tapped into, If you look at what we have available to us, it is not abnormal to see a price drop. Simply on pure supply-demand economics, this makes sense. Finally, the consumers of the world are saying, well, look, we've got a ton of this stuff. Why are we paying such a high price? And in fact, alternatives have been coming forward to get away from this, what I call the heroin of the world, to get away from it so that we could find alternatives to paying such ridiculous prices. We're being held literally at ransom. And you can see this through the coercion of OPEC. If OPEC, when they came together, OPEC is the nations of the Middle East that came together as oil-producing nations and said, look, why are we competing against each other? This doesn't make sense. Let's work together. Let's coerce and get a fixed price on this and control the global oil market. They did that with the blessing of the world. They just did it. And they had the right to do it because they're not a capitalist nation. They're not controlled by the world. They can do whatever they want. But we can choose not to buy their oil. And instead, what we did was, the United States in particular, went and met with OPEC. We need your heroin, so to speak. We need your oil. So consequently, we'll work out deals and we'll make arrangements. Of course, they've been very tight bedfellows throughout all this history. So with all of that said, recently, the Saudis wanted to send a signal to the world. They want to send a signal to Russia. They want to send a signal to China. We're the bosses on oil. And if we turn up and down our taps, that controls the prices. We want you to learn this. And they sent this signal to the world. And when they were in the last meeting, they said, we are not going to turn down our taps. You want us to turn... The U.S. was begging for them to turn down their taps. They wanted to turn them down. They want to produce less. Why? Less supply, higher price. They could justify then charging higher prices in the U.S. They could justify charging higher prices in Europe and in Russia and other places. But instead, they said, we're not going to. We're going to keep the supply as it is. They didn't increase it, but they just kept it as it is. We'll just let the price of oil fall to where it should be. And in fact, ironically, and maybe perhaps intentionally, the Saudis have been helping consumers around the world. It's absolutely atrocious. All the prices, many things, plastics, everything that we make from petrochemical usages of oil, from pumping our cars to transporting food across many nations to, getting everything anywhere, we realized was based on prices were going up, inflating, if you will, talking about our previous topic, where it was inflating because of these prices of oil, the transportation costs, everything, to create, package, food, and everything that we buy cost more under increasing oil price. And so they could justify higher prices around the world for all sorts of things. But people's wages haven't been going up. So the Saudis, in effect, are, in a sense, fighting for the people. They're saying, well, look, the world can't afford a higher price. We also want to send our signal out there that we're in command. And we want the world to know that. We need the leaders of the world to know who we are. And so they sent that signal. How long the signal will be sent and how low they will allow it to go is dependent on how much they can afford. It does take less than $10 a barrel to get money out, to get oil out of the ground for Saudis. But they still need a profit margin, right? Otherwise, they're not making any money. If they just break even. So they need a profit margin of some kind. So how low is reasonable for them to go? It's really their call. We don't know how long they would allow this to occur. In the end, what it does do, there's two sides to every equation. In this equation, the consumers of the world that are not directly related to and involved in oil countries or oil businesses are very happy to see this happen because they're all of this new profits, new job growth. It could be the best thing for our global economy we've ever seen happen in a long time. I don't know. You have to let the cards fall as they may. One example I just heard yesterday on the business news, BNN, they were talking about that a very good point, which is that with oil price coming down for good or bad reasons, that means the Canadian dollar, which is an oil-based economy, will drop as well. Not as much, perhaps, but certainly in tandem, because our economy is considered an oil-based economy. The higher the price of oil, in theory, the more valuable our dollar is. Now, that's foreign exchange, and they make their own considerations on trading our dollar. However, for good, perhaps for unrealistic reasons, that may not drop as much as we think, because if it drops down to around where we're at now, 85, 82 cents, that would make it affordable for the American car companies who, by the way, pulled out of Ontario because it was too expensive. When our dollar was at par with the U.S., it was just too expensive to manufacture cars in Canada. It was simply too expensive. They pulled out of Ontario. They left thousands and thousands of jobs, and they left factories empty. So people were heavily unemployed in that sector. If it keeps dropping and holds at this level, which is great for our economy, by the way, because the U.S. would come back in droves to employ here, and we're against manufacturing and costs in Mexico. So we do need a lower dollar to be able to be competitive because we do cater to the U.S. And if they can bring back jobs, that would replace many jobs in the oil sector that would therefore gravitate towards other alternatives. Also, our pricing for all sorts of goods would remain the same, if not drop, because manufacturing costs and packaging costs for plastics and everything, all these costs would drop. So companies could continue to make a profit margin based on the price of packaging dropping and even keeping the price the same and not even lowering their prices. They could still make more profits than in an inflating cost environment where oil is going up. Again, getting back to the idea that deflation can be a very good thing if it's controlled. And in this situation, as long as it's not a rampant drop, forever, and it is certainly under control, Saudis can, basically turn on or turn off the taps at any time. Once they feel that the population of the world is in a nice, comfortable position, and the powers and corporations of the world have had their power kind of relieved from them, and the transfer of wealth, in a sense, goes back to the people, I think that's when the Saudis will start to do this again. Will start to control the price of oil and let it go back up. I believe that they are really looking out. Interestingly enough, it's a personal call on this. I don't know if there's any professional reason to feel this way, but I have a feeling that there's a modus operandi, which is they're not comfortable, let's put it this way, with the mega control of corporate mega dollars by the ultra-elite wealthy, not passing wealth on to the people and controlling more and more of it, making decisions, and they feel as though they have to take back some control. Maybe not for the people per se, but certainly the net effect of doing that, for whatever reasons they may actually harbor for doing this, is that control of monetary goods and the economy is going back to individual consumers, and they now have a far more and vast more say in the future development of their governments and indeed the world as a whole, which I think has been taken away from us in the last 10, 15 years.
And Richard, too, I was thinking, I was looking at an article, the real money in oil isn't pulling it out of the ground in the barrel price, it's what you get for it after you refine it. So maybe Canada, instead of being so intent on exporting our oil, should be more intent on processing it here and making value-added products.
Indeed, I think, and we've talked about this on previous shows, and certainly, and it's been talked about in other areas as well. I've seen quoted on BNN and other newscasts, the idea that getting into the business of refining, while it would take away the business from the U.S., because they love to get our oil to refine it because they make contract business, is a diversification of what we would do. Now, to presume at any moment that oil would disappear off the planet as an energy resource is absolutely absurd. We'll always have some form. I mean, coal has become less, but it's not gone. Certainly oil could go the way of coal, where it just becomes less and less, and some other resource, renewable resource perhaps, would take over. other alternative energies may be discovered and used as well. But who knows, there may just be an ultimate balance between all different forms of resource energy where we're not depleting it too quickly and we have a nice balance between everything. And we can forecast on a balance. You know, if we have controlled growth, we can forecast our economies, we can forecast our personal lives better, we can see our wages are going to be there better. We don't have to fear that we're going to lose our jobs tomorrow with a balanced act. With unfettered growth in the oil industry, I was concerned for people that are moving up to Fort, McMurray, not realizing, that suddenly, if they're not doing it right, and there's pollution, and there's control issues, and there's taxation, and who knows, I mean, to pull out of that area, and the oil sands area in Canada, it's no big deal for many corporations. They go, well, we'll just go somewhere else. Yeah, we've invested a bit here, we'll keep some going, but we're going to cut the jobs in half, and we're moving somewhere else. I mean, that could happen overnight. And people don't, they're not realistic about understanding that unless the job growth is controlled and the realization of the environment is in balance, so we're not wasting it away, we're not going to have some unbelievable legal suit which will prevent oil from coming out of the Canadian oil sands because it's destroying the environment so badly that the government's going to be held at ransom to not allow it anymore. This lack of controlled growth in any area of the world, in any kind of economy, is the typical kind of wild ride you see in job growth and then job losses, and job growth and then job losses. People have tons of jobs suddenly, and then they're out of work and they're moving somewhere else. I mean, this kind of insanity is just what we're ripe for waiting for in these kinds of growth situations. Instead, it should have been done in a more controlled manner so that, we allow for alternative energies to grow, and we let things come in their own way, because you can't completely take over what's going on, but they can fit in their puzzle piece, and they can help people out that would prefer to go that route with solar or some other thing if they can. And then we'd still have our economy growing at a good controlled pace. We'd have better control of our dollar value. We wouldn't have these wild swings. And, without some good economic balancing act in concert with the government to allow job development and job growth and economic growth in different areas, considering all factors, we just have this wild, crazy, let's make, Wild West, let's make the, go for the gold and get it out the planet, let's go and spend it all now. And it's this sort of Wild West gold rush approach, which, petered out pretty quickly back in the day and was, a dead-end job too. So we've got to get back to practicality. And this is what we're missing right now with the current government that we have in Canada. And we do need a good semblance of common sense around the world. If you're building your whole infrastructure, your whole economy is based on one thing, it's like a monoculture. You get one problem in that monoculture, and as a farmer, if you get a fungus or something growing in there, your crop is completely wiped out. There's no diversification.
Sure. The Irish potato famine was a perfect example of that. Millions died.
Absolutely. Yeah, that's a good example.
Richard, well, thanks a lot for chatting with us. A lot of stuff to think about over the next week before we talk again.
Well, invest carefully and invest wisely.
As spoken as a true wealth manager.
My guest has been Richard Knowles of Knowles & Associates in Vancouver. If you have any questions for Richard, you can send them to richardk@customplanfinancial.com. You're listening to HowStreet.com radio. Find us on Twitter @TalkDigitalNet. We're available on YouTube channel Talk Digital Network. Comments about the show can be sent to info@HowStreet.com. I'm Jim Goddard.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.